This daily market update has been brought to you by Daily Wealth Report. Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is of the nature of general information only and must not in any way be construed or relied upon as legal, financial, or personal advice.
Good morning, traders and investors. It's Wednesday the 15th of August and we've seen the leading indices really switching their activity overnight, whereas the European markets had been showing a bit of weakness. The US market has now shown a little bit of weakness, and the European has actually found a little bit of buying activity. So we take a look at the FTSE 100, we can see it was up 32 points, or 0.5%, closing at 5864. This was off from its early highs. It had made those highs early in the day and spent the remainder of the day just coming off, and it does still show a sign of weakness from the buyers, so it is a still sign of caution in the UK markets. And as we noted earlier, it is a rounded top formation that's occurring with a short-term sideways movement just over the last few sessions. Taking a look at the German DAX, it's in a very similar situation. Whilst it looks like it's a down day there, it actually did close up higher by 64 points, or nearly 1%. So quite a significant amount of buying activity there, closing at 6,974. But again, a very similar situation where it found most of its buying activity early in the session and spent the remainder of the day just trading lower. The French CAC 40 actually gained 23 points, or 0.7%, closing at 3450, and again is in a very similar situation. As we take a look at the US markets, the Dow Jones had gained 2 points, so that was virtually unchanged at 13,172. We can see the candle that has formed there on the right. It is a what we refer to as a doji candlestick. Reflects uncertainty between buyers and sellers, and really just confirms our sideways motion through here, where there's only a 100-point difference between the highs and lows, and showing that we are in a very short-term sideways range. One thing to note about markets in general is that they don't go sideways forever. So whilst we don't know which direction the markets will break, we can expect that volatility will increase at some stage. That the longer it's going sideways, the more probable we're going to get some sort of significant movement. Taking a look at the Nasdaq, it had made a very valid attempt at trading higher early in the session, but it was not able to hold on to any of that buying activity. It closed down for the day, down 5 points, or 0.18%, at 3,016. So we can see a real rejection of the buyers up at this high point. So if buyers were in control, this would have gapped up and held up near the open, if not traded higher. But instead, what we've seen is that it's gapped up, and the market has fallen throughout the rest of the session. And this is confirmed as well by the S&P 500, the broader index for the US markets, which closed down 0.18 of a point, so that was virtually unchanged as well. But at 1,403, we can see that it's a very similar picture to what we've been looking at over the last two leading indexes. What that's meant for the VIX index is that usually we would see that it would not have changed too much at all. However, we have this contrary movement. The VIX index was up $1.15, or more than 8%, 8.4%, closing at 1485, a complete reversal of the short-term retracement that's been occurring whilst the markets have been going sideways. What this is telling us is that there's a little bit more fear that the markets might actually drop on the short term. So the short-term VIX index, which is looking at the 60 days of volatility in call and put options on the S&P 500 stocks, has rallied, denoting that there is an increase in fear towards the markets. Okay, that doesn't necessarily mean that markets will drop. It might actually just mean that there's more volatility that could drive the markets up as well. However, with the VIX having rallied like that, it sort of reaffirms the outlook that I just mentioned, that with the market going sideways for more than a week, that we are much closer to some sort of shift, either in upwards or downwards direction. So we need to be careful of this. The VIX could quite easily pop up very quickly. We've seen that in the past. A great example of that was through this May period through here, where it rallied quite strongly up into the 20s, closing at 1485. There's a high expectation that it could easily get to 16 without the markets actually moving anywhere. And finally, we'll take a look at the ASX 200, which showed a mild gain for the day on Tuesday. It gained 7 points, closing at 4,290. Wasn't a very strong day, wasn't a lot of conviction from the buys, as we can see. It's a bit of a consolidation after a bearish reversal pattern had formed in the previous sessions, and that is just a counter trend movement at the moment to this overall upwards trend. What we need to see is whether the buyers can return. If not, then there's a reasonable probability we could see this fall just a little bit further down towards 4,220, which was the previous low point. That would also coincide with the 20-day short-term moving average. The SPY futures are up a mild 3 points. That's not really giving us much reflection of what could occur on the opening bell. Things can change quite quickly based around a few points anyway. So at this point in time, there's a mild influence of bullish activity ahead of the market open, but we won't be too surprised if it were to open a little bit lower. We have some economic data out today with consumer sentiment and wage price index, which is mid to late morning, and then tonight we've got a round of US economic data that may have influence on the markets as well. Well, that's our update for Wednesday, the 15th of August. We hope that provides a little bit of information for you to help make some decisions. And if you do have any questions, please feel free to contact us at support@dailywealthreport.com.au. Look forward to giving you an update again tomorrow.